Welcome back. Today, we're unpacking the latest numbers from a big name in the renewable energy space, Suzlon Energy Limited. They've been on quite a journey, and these results for the financial year 2025 are something a lot of folks have been waiting for.
Absolutely. Suzlon Energy, for our listeners, is one of India's leading renewable energy solutions providers, primarily focused on wind energy. They manufacture wind turbine generators and also offer a suite of related services. They've got a significant manufacturing footprint and a large operational portfolio. This report covers their audited financial results for the quarter and year ended March 31st, 2025. The Board of Directors approved these results on May 29th, 2025. We'll be looking at both their consolidated and standalone performance today.
Great. So let's dive straight into the consolidated numbers. How did Suzlon fare in terms of revenue for the fourth quarter and the full year, comparing it year over year?
All right. On the consolidated front, for the fourth quarter of FY25, that's Q4 FY25, Suzlon's revenue from operations stood at 3,773.54 crore rupees. This is a very strong performance compared to the 2,179.20 crore rupees they reported in Q4 FY24. That's a significant jump year over year for the quarter. For the full financial year FY25, the revenue from operations was 10,851.32 crore rupees, up substantially from 6,496.84 crore rupees in FY24. So a robust growth story on the top line for both the quarter and the full year.
That's quite an increase. Now, how does that Q4 FY25 revenue look when we compare it to the immediately preceding quarter, Q3 FY25, the quarter-over-quarter performance?
Good question. Quarter over quarter for Q4 FY25, the revenue of 3,773.54 crore rupees is also up nicely from the 2,968.81 crore rupees they clocked in Q3 FY25. So, sequential growth is also evident.
Excellent. Let's move to a key profitability metric, EBITDA. What are the consolidated EBITDA figures looking like for both year over year and quarter over quarter?
The consolidated EBITDA for Q4 FY25 was 693 crore rupees. This is a very healthy increase from the 357 crore rupees in Q4 FY24. So, a strong year-over-year EBITDA growth for the quarter. For the full year FY25, consolidated EBITDA came in at 1,857 crore rupees, a significant rise from 1,029 crore rupees in FY24. Impressive. Now, looking at the quarter-over-quarter performance for EBITDA, the Q4 FY25 figure of 693 crore rupees is also up from 500 crore rupees in Q3 FY25. So, healthy sequential improvement in EBITDA as well.
That points to strong operational leverage. What about profit before tax, yani PBT, on a consolidated basis? Let's talk about PBT before exceptional items.
Right, the consolidated profit before tax and before exceptional items for Q4 FY25 was 551.24 crore rupees. This is a substantial improvement from 279.94 crore rupees in Q4 FY24. For the full year FY25, PBT before exceptional items stood at 1,446.63 crore rupees, which is more than double the 713.38 crore rupees in FY24. Sequentially, the Q4 FY25 PBT of 551.24 crore rupees is also up from 391.33 crore rupees in Q3 FY25.
And the bottom line, what's the consolidated profit after tax, yani PAT situation?
The consolidated PAT for Q4 FY25 is a significant 1,180.98 crore rupees. This compares very favorably to 254.12 crore rupees in Q4 FY24. That's a massive jump. For the full year FY25, PAT was 2,071.63 crore rupees, up from 660.35 crore rupees in FY24. Quarter over quarter, the Q4 FY25 PAT of 1,180.98 crore rupees shows a huge increase from 387.76 crore rupees in Q3 FY25. A large part of this quarterly and annual PAT jump is due to the recognition of a significant deferred tax asset, which we can discuss later.
Wow, those are some eye-catching PAT numbers. And how does this translate to earnings per share or EPS on the consolidated side?
The consolidated basic EPS for Q4 FY25 was 0.87 rupees, up from 0.19 rupees in Q4 FY24. For the full year FY25, the basic EPS is 1.52 rupees compared to 0.50 rupees in FY24. Sequentially, the Q4 EPS of 0.87 rupees is a strong improvement from 0.28 rupees in Q3 FY25.
Any significant movements in other income for the consolidated entity?
Yes, consolidated other income for Q4 FY25 was 35.25 crore rupees, up from 11.22 crore rupees in Q4 FY24. For the full year FY25, it was 103.39 crore rupees compared to 38.42 crore rupees in FY24. Sequentially, it's also up from 27.53 crore rupees in Q3 FY25. So, a notable increase there.
Okay, that gives us a good picture of the consolidated performance. Now, let's switch gears to the standalone results. How do these key metrics look for Suzlon Energy on a standalone basis, starting with revenue?
On the standalone side, revenue from operations for Q4 FY25 was 3,561.32 crore rupees. This is a significant increase from 1,995.95 crore rupees in Q4 FY24. For the full year FY25, standalone revenue stood at 10,161.60 crore rupees, up from 5,834.35 crore rupees in FY24. So, very strong growth here as well. Quarter over quarter, the Q4 FY25 standalone revenue is up from 2,762.60 crore rupees in Q3 FY25.
And how about the standalone profit before tax before exceptional items?
Standalone PBT before exceptional items for Q4 FY25 was 510.63 crore rupees, a solid jump from 249.51 crore rupees in Q4 FY24. For the full year FY25, it was 1,370.86 crore rupees, up from 672.32 crore rupees in FY24. Sequentially, the Q4 PBT of 510.63 crore rupees is also higher than the 389.77 crore rupees.
And the standalone profit after tax?
Standalone PAT for Q4 FY25 came in at 1,174.26 crore rupees, significantly up from 276.01 crore rupees in Q4 FY24. For the full year FY25, standalone PAT was 2,104.72 crore rupees compared to 723.17 crore rupees in FY24. Again, the deferred tax asset recognition plays a big role here. Quarter over quarter, the Q4 PAT shows a substantial increase from 438.17 crore rupees in Q3 FY25.
What about the standalone EPS?
Standalone basic EPS for Q4 FY25 was 0.86 rupees, up from 0.20 rupees in Q4 FY24. For the full year FY25, it's 1.54 rupees compared to 0.55 rupees in FY24. Sequentially, this is up from 0.32 rupees in Q3 FY25.
And standalone other income?
Standalone other income for Q4 FY25 was 28.80 crore rupees, up from 14.32 crore rupees in Q4 FY24. For the full year, it was 102.31 crore rupees versus 47.37 crore rupees in FY24. Sequentially, it's up from 21.48 crore rupees in Q3 FY25.
Thanks for that detailed breakdown. Now, let's talk profitability. What can you tell us about the EBITDA margins on the consolidated side? And how does standalone profitability compare, perhaps using PBT margins as a reference?
For consolidated EBITDA margins, in Q4 FY25, it stood at 18.4%. This is an improvement from 16.4% in Q4 FY24 and 16.8% in Q3 FY25. For the full year FY25, the consolidated EBITDA margin was 17.1%, up from 15.8% in FY24. So, definite margin expansion. On the standalone side, if we look at PBT before exceptional items as a percentage of total income for Q4 FY25, it was approximately 14.16%. For the full year FY25, this standalone PBT margin was around 13.31%. These are healthy, though direct comparison with consolidated EBITDA margins isn't apples to apples. However, both consolidated and standalone operations are showing strong profitability.
Were there any significant exceptional items reported in these results, either consolidated or standalone?
Yes, there were. On the consolidated front, for Q4 FY25 and the full year FY25, there were no exceptional items. However, in FY24, there was an exceptional loss of 53.89 crore rupees, primarily from a loss on derecognition of assets, partially offset by a gain on divestment of a joint venture. On the standalone side, it's a different story. For Q4 FY25, there was an exceptional gain of 30.45 crore rupees. For the full year FY25, the standalone exceptional gain was 102.86 crore rupees, which the notes specify as a reversal of impairment provision on financial assets. In FY24, there was also an exceptional gain of 50.85 crore rupees on the standalone books from a mix of divestment gains and impairment reversals. So, standalone profits have been positively impacted by these exceptional gains in both years.
Interesting. Let's touch upon the balance sheet. Any key highlights from the consolidated or standalone balance sheets as of March 2025?
On the consolidated balance sheet as of March 31st, 2025, the net worth stood at 6,106 crore rupees, a significant improvement from 3,920 crore rupees a year ago. Borrowings, both non-current and current, were down to 283 crore rupees from 110 crore rupees. What's really noteworthy is the net cash position, which rose to 1,943 crore rupees from 1,148 crore rupees. That's a strong positive shift. On the standalone side, total equity as of March 31st, 2025 was 5,529 crore rupees, up from 3,281.19 crore rupees a year ago. Specific borrowing details are a bit more granular, but non-current borrowings were minimal at about 23 crore rupees. The overall financial health, looking at equity and net cash, has certainly strengthened.
That improvement in net cash is definitely a big positive. What about cash flows for the consolidated entity for FY25?
The consolidated statement of cash flows for FY25 shows net cash generated from operating activities at a healthy 1,091.96 crore rupees. Net cash used in investing activities was 751.74 crore rupees, and net cash generated from financing activities was 343.01 crore rupees. This resulted in a net increase in cash and cash equivalents of 683.23 crore rupees for the year. The company ended FY25 with cash and cash equivalents of 1,112.83 crore rupees. No dividends were mentioned in this particular release.
Now, Suzlon has different business segments. Can you shed some light on how these performed on a consolidated basis, particularly for the full year and Q4?
Certainly. Suzlon primarily reports under Wind Turbine Generator or WTG, Foundry and Forging, and Operation and Maintenance Service or OMS. For the full year FY25, the WTG segment was the star performer. Revenue more than doubled to 8,481.31 crore rupees from 4,214.81 crore rupees in FY24. Segment profit before interest and tax, or PBIT, rocketed to 810.85 crore rupees from just 70.01 crore rupees. The foundry and forging segment saw relatively stable revenue at 489.34 crore rupees versus 482.55 crore rupees. PBIT improved to 34.59 crore rupees from 26.68 crore rupees. The OMS segment continued its steady contribution with revenue of 2,221.57 crore rupees, up from 2,061.44 crore rupees. PBIT was fairly stable at 745.49 crore rupees compared to 738.49 crore rupees. For Q4 FY25 specifically, the WTG segment also drove performance with revenue of 3,141.74 crore rupees and PBIT of 418.37 crore rupees. OMS revenue was 591.09 crore rupees, but its PBIT was 155.71 crore rupees, which is actually lower than the 224.25 crore rupees in Q4 FY24. That's a point to note for the OMS segment's quarterly performance.
That WTG segment performance is truly remarkable. So, summarizing the overall performance year on year, what are the key drivers you see?
The massive jump in both consolidated and standalone revenues and profits year over year is primarily driven by significantly higher deliveries and execution in the WTG segment. The press release highlights record deliveries. Improved operational efficiencies and better cost management likely contributed to margin expansion. And as mentioned, the large deferred tax asset recognition significantly boosted the net profit figures for FY25, particularly in Q4. The company's investor presentation also points to a robust order book and improved market conditions.
The report mentions several significant notes and events. Can you walk us through the most critical ones?
There are quite a few. First, ESOPs. There were ongoing allotments and vesting under their employee stock option plans, and new grants were made, which is standard for many companies. Second, exceptional items, which we've discussed, mainly gains on the standalone side from impairment reversals and divestments in the prior year. Third, the SEBI show cause notice. A notice from November 2022 relating to certain transactions from FY14 to FY18 is still under adjudication. Management believes it won't have a material impact. Fourth, the acquisition of Renewable Energy Services. Suzlon acquired a 51% stake in September 2024, which is a multi-brand O&M service provider. This strategically expands their services arm. Fifth, and very important for understanding the comparatives, is the amalgamation. Suzlon Global Services Limited, a wholly owned subsidiary, amalgamated with Suzlon Energy Limited. The appointed date was August 15, 2024, and it became effective May 10, 2025. Consequently, the comparative financial information for previous periods has been restated. This is crucial context. Sixth, also on May 10, 2025, the company transferred its project divisions for southern and western regions to step-down wholly owned subsidiaries. And finally, the deferred tax asset. A significant DTA of about 638 crore rupees on a consolidated basis and about 600 crore standalone was recognized in FY25 based on the probability of sufficient future taxable profits. This has artificially inflated the PAT for the current year and quarter.
That amalgamation and restatement, along with the DTA, are definitely key to interpreting these numbers. Now, a very critical part, the auditor's report. What did Walker Chandiok & Co. LLP have to say for both standalone and consolidated results?
For both standalone and consolidated results, the auditors, Walker Chandiok & Co. LLP, have issued an unmodified opinion. This means they believe the financial statements give a true and fair view in all material respects. However, for the standalone auditor's report, there is an emphasis of matter paragraph. This draws attention to Note 6 of the financial statements, which describes the amalgamation of Suzlon Global Services Limited with the company. The auditors highlight that due to this amalgamation, the comparative figures for the year ended March 31, 2024 and the quarters ended December 31, 2024 and March 31, 2024 have been restated. They explicitly state their opinion is not modified in respect of this matter. The standalone report also has an other matter paragraph stating they did not audit the financial statements of two branches, and their opinion, insofar as it relates to these branches, is based solely on the audit reports of the branch auditors. For the consolidated auditor's report, there are also other matter paragraphs. One states that they did not audit the annual financial statements of 19 subsidiaries and two branches whose results are included based on the reports of other auditors. Another other matter paragraph mentions that the financial statements of 5 subsidiaries were not audited, but management has certified these as not material to the group. Again, their opinion is not modified in respect of these matters. The amalgamation and restatement impact the consolidated figures too, so that context remains important.
So, unmodified opinions across the board, but with an emphasis of matter on the restatement due to amalgamation for standalone and reliance on other auditors for certain components in both. That's good to clarify. Given all this, what's the outlook for Suzlon and what are the potential risks?
The outlook appears positive, especially with the strong turnaround in performance. The company's press release and investor presentation are quite bullish. They highlight a record firm order book of 5.6 gigawatts, the success of their S144 turbine series, a significantly strengthened balance sheet with a strong net cash position, and a CRISIL credit rating upgrade to A bar positive. Management commentary points to a ramp-up phase completion and readiness for future growth supported by favorable industry tailwinds like India's energy transition goals and indigenization policies. However, risks always exist. Execution of the large order book will be key. The wind energy sector can be subject to policy changes and competitive pressures. Managing working capital efficiently as they scale up will also be important. And while the SEBI SCN is deemed not material by management, it remains an outstanding matter. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Great summary. So, to conclude our discussion on Suzlon Energy's FY25 results,
Suzlon has delivered a very strong performance in FY25, marking a significant turnaround. Revenue and operational profitability have seen substantial year-over-year and sequential growth, especially in the WTG segment. The balance sheet is much healthier, with a strong net cash position. The PAT numbers are exceptionally high due to the large deferred tax asset recognition. So, underlying operational profit growth is more accurately reflected in PBT before exceptional items and EBITDA. The auditors have given clean sheets, though the emphasis of matter on restatement for standalone results due to amalgamation is an important technical note for comparability. The outlook seems robust given the order book and industry dynamics. It's been a long road for Suzlon, and these results suggest they are firmly on a recovery and growth path.
a very comprehensive analysis. It's clear that Suzlon has turned a significant corner, but investors should always look beyond the headline PAT figures to understand the full picture, especially with items like DTA recognition and restatements. Thanks for tuning in, everyone. If you found this useful, don't forget to like, share, and subscribe for more financial deep dives.